All right, what's up, YouTube? So when it's trading the AM session, what you want to focus on is the opening price to 930, and you want to look for pools and liquidity. That's the number one thing you want to look for. But start by marking out your midnight and then marking out your 930, and then looking for highs and lows that are potentially the draw. And you want to blend them with like fair value gaps and whatnot. So the overnight is something you don't really want to pay too much attention to, live at least. So here's midnight, here's the opening price, here's 930. As you can see, we have a open fair value gap here. And that's one thing you want to do. Once you mark out your midnight to 930, you want to scan for like inefficiencies or an idea on where price is going on the higher time frame. So we're on the 15, we see a fair value gap here. Opening price is here. And it's best to be a buyer down here, but if you can't, that's fine, but it's good to buy under the opening price. Everyone knows that if you're bullish. Now you can see you have a raid right here on liquidity. Opening price, 930 runs down, takes out whoever was long, runs higher, comes back down once more, and then runs higher, eventually hitting your draw. So on the 5-minute, I'm looking for liquidity a lot. So I see we have trendline liquidity here. All this should go. Dropping down to the 1-minute is where I scan for my entry models. All right, so not to confuse you, this is the trend line here. This is the 930 running out that sell side, and then here's that fair value gap. So this would be the fair value gap you buy, targeting the low-hanging fruit. And that's giving you about a 3R. But some tricks that I've noticed to like trust my fair value gaps like these, and I don't really know if I spoke too much about this, but a lot of it is time. Like I trust that the most. So like from 9:30 to 10 o'clock, that little range, I expect there to be a low. Like it doesn't matter if it's low of the day or not, I expect there to be a low. So whenever I am in this time window, all I'm looking for is a fair value gap. And just between time and then that fair value gap with something that I'm already kind of expecting, that is really all I need. And sometimes I'll extend out to 10:30, and you'll see some of these. I might cover some of these, but sometimes I'll extend to 10:30. But usually from 9 to 10, there should be a low put in with a fair value gap. And even if you don't know bias, you can still just take that alone for like 2 to 3R, and you'll hit most of the time. But what I do, this is like a quick rundown, but what I do personally is I section off things, I categorize them at that time of day. That's what I do. And it literally teaches you what you need to be looking for. So if you don't know liquidity, I do teach that in my mentorship down below, and we have a Discord down below. But this is something to take notes on right here. So what do I mean? So as you can see here, this is the 9:30 open. I extend to 10. That's like my first bet is like 10 o'clock. I extend to there. And I look for that. And I look for that first fair value gap in that window. And I already trust that. And then you see the pool here. It just blends in. And then we have a higher time frame objective here that was met at 10:30. So 10:30 is like two things. You can either treat it like 9:30 to 10:30 and just extend out and look for that fair value gap, or it's your TP time. That's something that I don't think I talked about on here. But 10:30 is usually your take profit time. Here's another case. 9:30 is here. Extend out to 10. You have that fair value gap in there. It runs and takes out that high. I mean, there's executions here. Short. Hit for break even. Long. that first fair value gap within 930 to 10, and it's not the first one you see, it's the first one that makes sense. Like you can see there's an entry here. Get rid of some of these. So again here, see 930, extend out to 10. That's where I hunt for that fair value gap. You see it dips in here and then runs higher. Buy side liquidity pool, and then there's a previous high. So if you were to look at this image here and compare it to the first one, they look the same, right? 930, 1030. 930, 1030. They look the same. Equal highs, equal highs. That fair value gap, the fair value gap. So the thing is if you can find something that occurs at a specific time of the day, which for me it's 930 or 830, but I like to focus on 930. So if you can find something that consistently occurs every week, a few times, that is your multiplier. You guys are over here chasing a fair value gap, chasing a breaker and order block every day, every macro, like, bro. And that's exactly why you're blowing your account. Like, oh man. Yeah, so this is how I operate. This is how we operate in my mentorship. Looking at this example here, you can see 930 to 10. I'm looking for that fair value gap. And in this case here, the fair value gap came up here, but I took mine down here at the inversion. And I TP'd over here at these highs, I guess. And 1030 should be somewhere around here. And you can see it meets the higher draw. So you can use it as a TP time. So if you do enter around 930 to 10, if you're in right there, you can just let it roll until 1030. Strictly using time. You don't even need to be on your chart. You could just use your time and just get out at 1030. I mean, you can see it works. Especially if you have a higher time frame draw. See, that's another thing you guys need to watch is like I have higher levels. I'm not just aiming at nothing. There's always something. There's a reason why 1030 is going to click when it clicks. That's another way to put it. So you're getting a good look at an in-depth study, and there's more types of categories that you guys need to pay attention to. So I'm gonna give you guys, I guess, one more, but this is one. I named this one my Revamp. Classic Revamp buy. In terms of understanding, right, like what direction it wants to go for, like, oh, how do you know 930 is going to dip down and then run higher? Like, how do you know that? How do you know it's going to run higher and then dip lower before it happens? Easy. 15-minute, 5-minute, and then your daily. Like, where's the day going? If you can look at that daily candle and say, oh yeah, we're going bullish, then you know you want 930 to dip lower. And then once you're already bullish and then that starts happening, now you know how to use time. Now you start seeing things happening at these times. You're like, okay, I'm getting in that win, lose, or draw. Like, and that's the trick. You want to live in that realm and you want to avoid tail spinning. Like, you don't want to fall into that because that is what's going to kill you. But in terms of another model in the Revamp classification, this is a pretty good one to look at. This might trip you guys up, but it's good to look at. And I have executions on these. It's just not in this tab. So what do you notice about these two pictures? Put it in the comments, you guys. I'm gonna give you guys a second to answer. Look at these two pictures and do you see how they look the same? I wish I can scroll in to show you guys time. But in terms of time, they're very identical. So let's start off by 930. So you can see 930 here. It just has a straight run up, comes down, takes out the sell side, and then goes back to bullish. So let's say you're like, oh yeah, I'm bullish for today, right? And then 930 runs higher. That doesn't mean you missed the move. Again, you take your 930, you extend it out to 1030, and you look for that fair value gap. So usually I'd be like, okay, 930 to 10, where's my entry? And if the entry is bearish, which I did take this short and this short, like I was bearish for this short, but I was bullish for the day. It's like, well, how do you do that? 930 to 10 or 930 to 1030, and you can use time how you need. So if it's 930 to 10 and you see a sell side liquidity pool, but you're bullish, that just means you have a lower risk sell. Like you can sell it still down to that here. But if you still have time on the clock, which is to 1030, you can always take that fair value gap here, long, back to where you were headed. Same thing here. 930 opens, takes out that high. From 930 to 10, you can see my revamp. You have a short that goes straight down your sell side. But between 930 to 1030, you still have that fair value gap here that you're able to buy. And I'm gonna give you guys one more tip just because I've been absent. And you never picked up on this. So don't say, oh, I've been doing this, I knew that. No. This tip is coming straight from me. Hate to sound arrogant. So if you have two fair value gaps, right? If you have two of them, and you want to know which one to take, if you're on side, they're correct. Look at this fair value gap. 930 to 10. You can literally just buy this and put your stop loss right here, which is why I have it drawn out like that. Because if you're truly bullish and price is getting up here and up here by 1030, if that's the case, because you have the knowledge now, you should be able to buy that and trust your stop. It's not going to violate. That's the trick I'm telling you. If you enter in these times and you put your stop loss where it needs to be, you're not going to be violated. And you can see that if you just study. You have two fair value gaps here. One here, one here. There's a reason why I bought this one and trusted this one to stay open. Again here, 930 to 10. Fair value gap. It respected it and left. There's no hassle. There's no fighting, sitting in trades for this long. Like you can see, it literally taps in, respects it, and then leaves. That's one thing I want you guys to take away from this. See this? Fair value gap. And the reason why you're seeing it a lot right here from what I'm showing you is because price is an algorithm. It's literally happening at this time. That's what I want you guys to take away from this. But nonetheless, if you're on side, they're always going to hold. So this is a whole different one. I don't want you guys to think, oh, it's the same. It's really not. As you can see here, there's two fair value gaps. Price takes the first one and has the second one open. So if you train your mind to see this every day, like if you just train yourself to see that, when you see it live, you're not going to have like conflict. And that's why I say, if you're struggling with psychology, it's your model, bro. I don't care. I don't believe in psychology. You guys can say whatever you want in the comments. It's not a thing, bro. It's all in your head. It's a gimmick. Psychology is real when you know what you're doing and not following it. But in terms of you having a strategy, you haven't got to pay out. Your strategy's never worked because you haven't got to pay out. You haven't been consistent with your model. Your psychology is a reflection of your results and what's happening. It's not. It's just telling you your model is garbage, bro. That's just what it's telling you. So when your psychology is bad, start tweaking your model. And what helped me with that is I literally collected data. This is just a small thing. I have a folder where there's a bunch of these and a bunch of different types of models. And this is how I collected my data and trained myself to see things happen before they happen if I'm on side. And that's what I want you guys to take away from this. All right, you guys want some more wizardry? I got you. I was gonna wrap it up, but I gotta seal the deal. Um, Remember how I told you about the fair value gaps? Like if you're on side, they're not gonna violate. Whoop de whoop. Here's the daily time frame, and all this logic is the same if you understand time. Um, you can see there's 6 hours and 17 minutes left to this candle. You see the CE right here, how it's marked out. You got to be able to speak the language we're speaking when we trade ICT. So I'm already identifying this fair value gap here was respected, and we just wicked into that one, and we still respected it. We have another fair value gap here. I'm already expecting this to hold up to this CE. And as you can see, that same candle flipped higher, and then we ran and touched the CE with 5 hours left. So what does that do for you? What do you think your 930 model looks like? Like, what do you think it looks like to that level? Think about it. You have this day, and then you have this day. That's 2 days that you had to draw off of a key level with your 930 model. You don't need all those other time frames. Like, anyways, so looking at this daily, I drop down to my 4 hour, and I just start looking for reasons to go higher. So you have to remember this this red dashed CE, because that's the focus. So we're dropping down to the 4 hour. You can see the red dashed CE is where I'm looking. So now I'm thinking, okay, we're aiming up here. That's pretty far. We have a fair value gap here, and we took sell side. I'm like, we're drawn higher is where I'm looking. Dropping down to the 1 hour, I'm still looking higher. And you can see I do what I tell you, midnight to midnight. That 930 is here. And I'm just seeing, okay, how does this want to play out? We're not likely to go lower. We're more likely to go higher. And the reason being is all this liquidity and then the inefficiency here is just details. And as you can see, 930 runs higher, hits that fair value gap, and then comes back into the range. And this is the magic. Okay, this is what time does for you. Okay, not bias, time. What do you see? You see my revamp from 930 to 10. It's time. I'm like, okay, we're at that time where we start macroing, and obviously you see the entries. It's not random. I just wanted to put that to bed. Like 930 to 10, sell, cover, finish. That's the model. And you can extend to 1030 and get on side with going higher. And I believe, okay, here it is. 930 to 10, have my shorts. Then you extend to 1030, and you have your fair value gaps that are going to hold. They're not going to violate. You see? You just have to trust. You just have to trust studying, bro. Like, go back, collect as much data as you can, shove it in folders, and then once you do that, start categorizing them on their similarities on what they look like. And then boom, you have every entry model you need right there.